Hey, what's up, family? It's your boy Darren Brown with Darmac Bills and Brightway Insurance, coming to you with some more information regarding your business, your investments, and how to become a better business person. Again, whether you're a college graduate or not, it really doesn't matter. Okay, but let's be clear, and I said this amount of videos. College does not teach you how to be an entrepreneur. College doesn't teach you how to open a business. College doesn't teach you how to become self-employed. College, what it does do is put you in a position to go get a job, okay? And some may or may not get that job. So this is going to be a whole 180 from probably what you're doing as a college student, which I was one. So I'm not going to be that hypocrite. College has its benefits, but if you want to switch it up and be a game changer on certain things, there are certain things that you're going to have to know. My field of expertise is basically real estate, construction, a little bit of history about me. I was in the mortgage field for about 10 years, 12 years, what have you. I'm a general contractor, property 220 agent too. Has different certifications because I'm still going to be a student. You know, if you went to college, you're going to be a student. You're going to be that person. You're going to be that person that's seeking the knowledge and to help you grow, no matter what field that may be in. But I'm just going to be speaking up here above about certain things when it comes on to my field and my interests. Okay, so you can take it, use it, whatever you want, and try to make these videos as short as possible because y'all all over the place. All right, so let's talk about real estate, for example. You got people out there, the market is booming, it's this. People are paying over ask price, they're doing all that. And you want to start your real estate portfolio because you feel like, hey, down the road, I want to have this portfolio that I can live on, get this positive income or passive income, whatever term you want to use, which is fine. But do you have the first idea outside of, hey, I want to buy it and I want to fix it up and I want to sell it. I want to buy it and fix it up. I want to rent it. Okay. When you're looking at a duplex or a triplex, do you know what to look for? Okay. Do you know the cash flow of that property? Do you know how to calculate it? I'm going to bring it up again. You should have a financial calculator. I have a HP 10B2 plus. I mean, there's other ones out there that you need to know how to figure out your mortgage payments, and you need to figure out, other things when it comes into your investments. So the one thing I want to talk about, a pro forma statement. That is just, hey, in a nutshell, what is this building making? What is the cash flow on this building? Okay, people can say it any other way, but I'm gonna give it to you my way. Okay, this is Darren's way. What is this building making? What is the expenses of this building, and what do I have left over? Simple. That's what it is, okay? So you need to know how to do that, okay? This building is gonna cost me this. I'm gonna finance that. And now I need to know what the tax on this building is gonna be, what the insurance is gonna be on this, what the maintenance as far as landscaping, cutting the grass, that. Do I have a separate utility bill for myself where, I got the outside lights that I gotta pay for? Is there a sprinkler system, a water system that I got to pay for outside of the tenants? Are the tenants paying the water bill, or I'm paying the water bill? All those things matter when you buying an investment property. So just don't go in there, I want this fourplex and then I want this fiveplex, which is a commercial part. When you go over 4 units. But if you're buying that the triplex or fourplex, you need to know numbers, man. You just don't go in there and get excited and then realize that this building is not worth it. Okay. We're not gonna get into the tax part of it as far as the tax benefits of it, because that's part of it. That may be another video. But right now you want to know, how do I do a pro forma statement? It's basically, hey, what are the rents going for? Okay. So, and I'm not really writing on the board because I don't know if you can see it, but what are the rents going for? Okay. You got the rents, you got 4 units and they're each going for $1,500, right? So right there, you have $6,000 in gross rents that you got coming in. But we always do a little factor, whether we say, minus a vacancy factor, that could be 5 or 10%. It's no written rule. whatever you want. So you erase that from there, because you may have 3 units rented, you may have 2 units rented, and 2 occupied. So you got to know that kind of stuff, right? So when you look at those numbers, hey, this is what my gross rent is going to be. This I'm gonna take out $600, blah blah blah. So guess what? $5,400 gross. That's gonna probably be my effective income, because you may not have a laundry service there. You may not have any vending machines there that's gonna give you other income. So you don't really worry about that. Okay, I'm making basically $5,400 on average if they all 4 rented out or what have you. Okay. Then you have those expenses, the maintenance. Okay, who's property managing? Are you going to property manage, or are you going to hire a company that does that? They're going to probably want 10% of that. And then you just do your steps, right? You just do your steps. Okay, this is property management. This is what I'm going to have to pay for maintenance, for the upkeep. This is what my water bill, my electric bill is going to be. All those things is going to apply. Then you're going to have something what we call just things that can go wrong. What if an AC unit goes out? What if you have to fix a water leak? So you need to put money aside of that. That could be 5 or 10% of the gross rent that you're going to have there, and you set that aside. That probably go into a different account in the event somebody call you up and say, hey, my air conditioner went out. So now you got a $4,000 or $5,000 hit right there. So if you're just taking the money and just spending it going on vacation, you don't have any money to fix the building. Okay, so we want to make sure that you do that. So make sure you all that money. So what are you saying there? I'm saying, okay, you got your gross, you got your expenses. Boom, boom, boom. It could be 5 or 6 items. It could be 10 items, depending on how big the building is. Boom, you take that out. You minus that out from your gross, and you're gonna come with what you called, okay, NOI. NOI is just an acronym for net operating income. Okay. That right there is the money that you are going to be able to pay your mortgage. Calculator. So once you figure out the cash flow of this building, you say, hey man, I got $2,000 left. I'm gonna have $3,000 left. Unless you're paying for it cash, then that's your money. But if you financing it, okay, but I'm financing X. What is the payment going to be on this number that I'm financing? You really don't have to have a banker to tell you that. You don't really have to have a real estate agent tell you that. You don't really have to have that. All you need to know is how to figure it out, man. Use a calculator. So once you figure that out, you're going to come up with a number. And then you're going to deduct that number from your net, your NOI, right? Whatever's left over is yours. Okay, that's what the buildings will generate for you. Okay? I know I went kind of fast. I know people are going to want me to write that on the board to give you an example, and I'm going to do that too. But I'm just going to give it to you in the video first, okay? Right now, I'm just giving you the words so you can go back to the video and write it down. Now, in those expenses, remember, in those expenses, you're going to have your taxes, whatever the taxes are in that building. You're going to have your insurance, whatever insurance is going to cost on that building. That's part of your expenses. Your NOI is only to pay the mortgage if there is going to be a mortgage. So remember that on your next purchase. If you're buying a duplex, you do the same thing. You do it on a single family too. If you really go, hey, I'm going to buy this single family. I'm probably going to get $3,000 a month. Okay, I'm probably going to have to pay for lawn service. I know what my taxes and my insurance is going to be. I got to I'm going to deduct all that. So what is my mortgage payments going to be on this? Okay. So therefore you may break even, but you have an asset that's accumulating over the years. Okay. So keep watching the videos. I'm here to educate. If you have any questions, keep tuning in. But I'm probably going to put it on the board because some of you, you need a visual. You need to see things. That's what we are right now. Okay. Till next time, this is your boy D. Peace.